In 2019, my net worth was like January 2019, like $4,000. And when it was like 100 times higher a couple years later, it didn't make me happier. I experienced more euphoria, but it made my life worse. I had had like 6-figure swings in a day at one point, and I'm working on a farm and I'm getting food and board, but I'm getting paid $11 an hour. And I'm like, oh, I'm down 100 grand today. And I'm like, I'm in the
Oh,
field, like pulling carrots for $11 an hour. And I'm like, eh, it's all good. The sun's shining. Yeah, it's just, it made money feel so crazy of like, what does it mean? Your computer system needs to have a fundamental idea. Because from the beginning, it was like, bro, why does this work? And he's like, I have no idea. But it does. I'm just data mining. I'm like taking different stuff and plugging it together and it works. And I'm like,
yeah.
I'd feel a lot better if I knew why it worked, right? So the system that we developed is based on, okay.
Welcome back to the Unpacking the Markets podcast. Now, before we kick off, can I please ask you to subscribe to this channel so that we can continue to grow and help traders worldwide? Let's get into it. So of all the people I've interviewed, I think you have probably one of the most interesting and alternative lifestyles and approaches. So my first question is just, how did you get into trading?
I got into trading. It was during COVID, the same reason a lot of people did. Like business was booming. I had a lot of money coming in. Personally, the stimulus checks. And one of the things that triggered it is my dad died of COVID. He was one of the first Americans to die of COVID in March. And when
Okay.
everything was settled, I was going to get a little bit of money. And it took a year to arrive. And in that year, I started trading, like waiting for the money and figuring out how. Yeah, but it was also like the first time in my life I had saved up. I'd saved up like 20 grand through just hustling. So I was like, I'm just going to shove it into Bitcoin. I see what's happening here. I had met one of my buddies had traveled the world for 2 years. He had worked a corporate job and just on the side was stacking Bitcoin and the stock market. And I don't know what he got up to, like mid 6 figures. And then he quit his job and traveled for 2 years. Just went east around the world, Egypt, Asia. He stopped and I hosted him in Hawaii. And 2020, he's like, hey, it's time again. And I'm like, I saw what you did. Okay, I have 20 grand. Bitcoin's 10. I'm going to buy 2 of them. Whatever mistakes I made are going to get bailed out later. So I started with leverage. Like, I'm going to go to Celsius, give them 2 of my Bitcoin to get 10, at this point, $15,000 in debt, buy another Bitcoin. And then I just kept doing this, pyramid my position. I wasn't looking to trade. I was like, just saw an opportunity, and I was also trying to protect my money because I saw the inflation that was happening. So I mean, same reason a lot of people started, but yeah, I mean, I ran and it worked amazing the first couple of years, but I just ran into predictable problems,
Yeah.
which we'll get into. Yeah.
Okay. Very good. And sorry to hear about your dad, but that's kind of a wild start. So your friend bought and held Bitcoin, and you kind of did the same. So much so that you just kept buying and holding Bitcoin. It just kept going up through COVID. Is that right?
Yeah. So my friend Luke, he had done the same during the previous bull run, 2016-17. So he was buying at sub 1,000 and then
Wow.
sold it like I don't know, his average exit was 8 or something. He kind of round tripped it. And I thought like
Yeah.
I'm just gonna buy and hold forever. But I kept adding more leverage. So when I bought a whole Bitcoin at 69,000, I had like $100,000 in debt at the high. And this isn't like perpetual futures. This is like loans outstanding. And I'm like, actually, I can't buy and hold because I have this debt. So I need to have a stop loss. So my first stop loss triggered at like 54,000. And then I slowly exited from there. It went great. But then I was like, I got into perpetual futures trading. And yeah, it's not like buy and hold at all. It was way more, I got way more involved.
Mm.
And yeah, I learned about day trading and the reality of it and how it affects your mental health, how hard it is, dangers of leverage, and so on. Um,
Yeah.
and yeah, I mean that's I think why people like my channel is so totally authentic about it, like the mental illness it caused me and the
Mm.
loss of time and trying to take the glamour out of it because
Yeah.
everybody on YouTube wants to act like they never lose money and like everything because they're all trying to sell a course and paint everything perfect. Well, most people not only do most people lose money, but most people it really negatively affects their lifestyle too. So, I
Yeah.
mean, yeah, I've experienced these things and I know what's common and true.
Mm. Yeah. And before I ask about that, you mentioned your friend said to you, "It's time again." As in, I assume you mean it's time again to start buying Bitcoin
Right.
after he did it the first time. So how did he? Was it just the kind of all the stimulus in the US that he said it's time again, or that you both decided it's time? It's a good time to get in for another potential bull run.
It's also the 4 year halvening cycle, 2020, 2016,
Okay.
2020, 2024. So is that. And also it was obvious. I mean, everybody saw the same play because it was like the COVID crash and they just started dumping money in the market. And it wasn't, it was like, I'm afraid to not buy because they're devaluing the dollar. Inflation's about to be out of control, right? People were telling me not to do what I did, but I was like, this is the safest play right now. So, yeah, I mean, one of the reasons for beginner's luck in the market is because the first trade isn't you're looking for a trade. It's like something obvious you need to do. And then you go start looking for trades after that one. So
Hmm.
that was like, I need to do this to protect the money.
Yeah. Very good. I mean, you say it's obvious. A lot of people didn't play COVID that successfully. I think, or I think of some perma bears you watch on,
Right.
or even at the start of
Yeah,
COVID when
yeah.
people,
Uh-huh.
not sure market
Right,
kind of
right,
rallying or falling, or they're trying to or they're saying it's going to fall further, and then it just rips, and they're trying to sell it the whole
right.
way. So I don't think, yeah. Well, I think, yeah, you've
Yeah,
done quite
yeah.
well to spot that, right?
It's true, but it was like beginner's luck, right? Where a lot of people are scarred by bear markets and are unable to hold the long trends. And that happened to me later. But
Hmm.
I mean, there's this little bit in Market Wizards. I don't remember which trader it is, but the senior trader hires the young trader, and he's like, "Hey, there's a bull run coming. I hired you. You're 20 years old. You're young and reckless. I'm too scarred by the bear markets to trade the bull market. Correct? I want you to just be super aggressive and reckless, basically." So yeah, that's like part of what beginner's luck is you don't you're like not scarred by the trauma or you're not paranoid about the crashes and so on. So
Hmm.
yeah, I think I was pretty lucky. Yeah, in certain ways, just coming in when I did, how I did.
Yeah, I kind of I find I relate to that a bit in terms of why I think I'm a bad trend follower. Discretionary trend following is
Yeah,
always from just kind of going through choppy markets or bear markets,
yeah,
and then I just have this weird kind of paranoia about a
right.
decent looking long term trend, and I'm like, oh my god,
Yeah, yeah,
it's obviously everyone's long. I should be short now,
yeah,
and then I just get run through
yeah,
with it.
yeah, yeah. It's like experience holds you back, in trading
Hmm.
sometimes
Yeah.
psychologically.
Yeah, 100%. And so your journey into kind of perpetual future started after that, and I guess did you start off? Sorry, Bitcoin perpetual futures.
The
Did you start
reason,
off?
okay, the reason I got into perpetual futures, so I had built up a huge position. I had sold most of it, but I locked up like three Bitcoin in a long-term staking program at crypto.com. It was like a six-figure sum when I did it. And I realized the moment I did it, like, yo, it's gonna go super fucking low. Sorry, I don't know if I can swear on your podcast,
So
but
it's okay.
yeah, it's going. I was like, this was a huge mistake. I would sell it today if I could, but instead I'm locked in for months. Ended up coming unlocked at like 20,000 or something. So I lost like it went down like this position went down like 70, 80 grand. Like so I started
Wow.
trading perpetual futures to protect that position because I needed a hedge. So I came in and I'm like, let me short a six-figure altcoin position
Mm.
as a hedge because I cannot sell my Bitcoin, and I think Bitcoin's going to do better than alts. And at first, that did great as well because it was just necessary, right? I mean, it makes sense, right? Like you're long and you don't want to be. Let me put on a big short. It has to be perpetual futures for a short, but then yeah, it devolved into common trading addiction of well, I mean, from the beginning of COVID, I'm checking the Bitcoin price 60 times a day, right? I don't know how many. Like,
Right.
I'm supposed to be working in the office a couple hours a day, and it's disrupting my ability to work. And then once the perpetual futures start, now it's out of control because I'm supposed to be putting and taking positions on, and it just like totally takes over my life. And I had made so much money that I could walk away from my job too. So now I'm trading perpetual futures full time all of a sudden, and I'm only like in my second year in trading. It's just like such a bad recipe
Right.
for for bad things to happen.
Yeah. And so 2 years in, you were trading, I guess, six figures then, was it, for perpetual futures? Or
Yeah,
how much
I
capital were you
started.
trading with?
I mean, I had like an equal amount, so like low six. I think like I had 100,000 ish, 120 in there, and I was trading with 1x leverage,
Mm-hmm.
and I had
Well,
three Bitcoin locked up on the side, and I was trying to protect that, and I did a terrible job. I lost on both. I lost on both sides. Yeah, I lost on both
oh, well,
sides of it. Yeah.
yeah. It's yeah. I want to say I can relate, but I cannot relate with that much money. But I can definitely relate trying to hedge something and losing twice as much as I should have when I was first not fully understanding
Yeah.
how to hedge. Right, so it stinks
Oh
difficult.
man. Yeah, the size of the money was crazy. Like it's so weird. I mean, during COVID, this I had like six-figure swings in a day at one point, and I'm working on
Yeah.
a farm and I'm getting food and board, but I'm getting paid $11 an hour, and I'm like, oh, I'm down 100 grand today, and I'm
Mm.
like, I'm in the
Oh,
field like pulling carrots for $11 an hour, and I'm like, yeah, it's all good. The sun's shining. Yeah, it's just it made money feel so crazy. Of like, what does it mean? Like,
yeah.
why? Yeah, it's just my reality with it wasn't good for me. It screwed my head of like, oh, I'm up a year's income today.
Mm.
My job's stressing me out. Why am I working a job?
Yeah. And the actual hedge you had on, was that was there any particular strategy you were using, or was it just short?
It started just short, no stop loss, 1x leverage. It's just a hedge on the other side.
Yeah.
And I'm trying to remember what happened with it. I think I was pyramiding it a little bit. I remember this was during the 2022 sideways chop to start the year when there was like several rallies and Bitcoin made it all the way back to 48 before dumping to 30 and then to 15. So I remember I was up on the hedge like 20, 30 grand, and it had dumped on the Ukraine war news. And
Oh
I
wow.
woke up the next morning and it was break even. It had totally reversed. There was an insane rally. And yeah, I didn't hold it. And then I ended up getting chopped up. I just couldn't. I didn't long term hold the short because I didn't believe it in the same way. And also, there's leverage, so I had to protect it in a way. But I don't know. I was a noob, right? I'm not really that beating myself up for that. I didn't know what I was doing.
Yeah.
I was
Yeah, but it's
trying,
a
tried my
wild.
best.
Yeah, yeah.
Huh?
No, I mean it's such a wild start, as in you compare with other people's kind of first 2 years of their training trying to become profitable, like making that much
Yeah,
money and then having those kind of swings within 2 years, I think is
yeah.
it's pretty immense, right?
Right. I mean, it did work at one point. Even at the end of the year, the end of that year was the FTX collapse,
Okay.
and I saw it. I was like glued to Twitter in an unhealthy way at this point, and I'm seeing the SBF tweets and the
Mm,
CZ tweeting back and forth, and I'm like, I need to get my money out of there. So I'm requesting. I had 25 grand with FTX, and I'm like, I'm about to lose this money. So I put
mm,
on a fat short as a hedge for that. Like a lot of my trades weren't like I want to trade. It was like if I don't do something, I'm gonna lose a bunch of money, right? Like I'm gonna lose this 25 grand with FTX. So I put on a short with Bitcoin and ETH. And when I saw FTX was going under, I took off the take profit. And I was going through insane drama in my own life. And like within a couple of days, it was up $60,000 in profit on the perpetual future. I ended up cutting it at 45 grand, closed it
mm.
at the bottom. And I'm like, I'm a consistently profitable trader. Like thinking, yeah, and it wasn't, I had no idea then what the next 2 years were going to bring. But yeah, I thought that was almost a bad thing to happen too, because it was like making so much money on the short side in such a short time fried my brain and like programmed me to be always looking for shorts when, from 15 grand, the proper move was just like, all right, let me just dollar cost average in and then go back to work, right? Do something else. But
Mm,
instead I was just, yeah, that's kind of when the addiction got worse, I guess.
mm.
Yeah.
Yeah. But it sounds like, I mean, risk management wasn't exactly, position sizing and things like that to your overall capital wasn't really something you were doing, was it? Or were you still positioning, as in how much of your capital were you taking in these positions? Was it just when you made, say, 45K on that 25K short, were you using all of that 25K short or just a portion of it?
Yeah, the whole time I've had money in savings. I've never I've never blown up. I just ended up bleeding down for years.
Okay.
I mean, yeah, my risk management has been like something I've been very good at is only risk a percentage. That percentage might be 5% though, but never
Mhm.
risking more than that, right? So that's kept me in the
Okay.
game for a long time. And a lot of my risk management has been hedging, where it's like I've got a long and I've got a short, so
Mhm.
I can't lose that bad, most likely.
Yeah.
But this
And
was
I
early
also,
days,
yeah, but I heard you speak a little bit about prop firms as well
right?
in your journey as one of the things you came across. So at what point did you start kind of moving towards the prop world?
Okay. Yeah, that was actually shortly after the FTX thing. I started the
Mm,
year on a huge losing streak. I was long 50 Bitcoin at 17,500 and I just closed it for no reason. I was like predicting and calling like a huge reversal and I was just like stressed and anxious. This is a point where I was just like looking at the chart all the time, all the time, all the time and like
mm,
just being emotional. Like if I'm feeling anxious about a position, I just close it. If I'm feeling greedy, I just open it. So,
yeah.
you know, I'm not going to say I was supposed to. If I had held that would around for hundreds of thousands within a couple weeks, it never came even back to break even. It was in profit from the beginning. Like I got filled 50 Bitcoin on a wick, and then it was like just
All right.
straight up to 25,000 within a couple weeks, which from 10 would have been 500,000, and it's millions today, and that caused me to go. I wasn't very good at like people can relate to this. Would spiral if something like that happened. I didn't even lose money, but I'm like, so now I'm just like, just over trading January, February, March. And I'm like, hey, I'm losing too much money. I've been watching this prop firm thing for a while. Let me just trade prop. This is a better way to conserve my capital. And just as
Mhm.
like a more structured battleground, So I started trading in prop, maybe like all in prop or just only prop, maybe like April, May 2023. And I went on an insane run. It's hard to even believe. I passed 15 straight challenges and payouts across like five
Oh,
firms. I couldn't lose. I was losing trades, but I was like, this makes perfect sense. Shift my risk from the trade to the whole sample of trades. So I think I had invested like $5,000 on five 200K accounts basically, and all five of them, pass one, pass two, payout. So 15 straight, and I withdrew like 30 to $40,000 that summer. By that summer, with no
oh,
losses, and I'm like, again, I'm consistently profitable trader. I got like I'm. They're interviewing me for their social media, whatever, and then another thing caused me to spiral of I was missing like this dump in August, and I don't know. A lot of also the reason I would go on losing streaks is because I knew my systems weren't robust. So if something went wrong, it made sense to bail on the system and like figure. So this whole time has been a huge sampling process of trading different systems. But I ended up. It took me like almost 6 months to get funded again. And in the process, I had reinvested the $30,000, and that's coming into this year. And boom, I'm seven figure funded again coming into this year, and I have my first withdrawal coming. It's about $8,500, and then this is when the um, MetaQuotes issue happens, where I don't know if it's the CDC or whoever is like, hey, you cannot you no uh, no leverage trading for Americans, whatever. And they came in and they're like, all right, well, the prop firms, we can't target individual prop firms. We can target meta quotes. Um, I don't know who was really trading prop during that. It's just, they all scammed. Every single one scammed. Most of the prop firms didn't make the transition. A lot of the ones that didn't pay people quietly. So like
oh.
bespoke funding still owes me $8,500. They didn't pay people out and they're still in business. They just sweep it under the rug. I was with the
Hmm.
funded trader. They went down. Skilled funded trader went down. The previous summer I had gotten was with my forex funds. They went down. Um, yeah, almost everybody went down except for FTMO, and I'm technically still funded 400K with them, but I have like $1 of drawdown, and I just get the monthly notification of like, hey, you end of trading period. But yeah, that was I'll never trade prop, and I tell people not to trade prop. I knew from the beginning, but I just got the fast money got me where it's like they have an incentive for you to fail because they're not
Hmm.
profit splitting on the back end. So if you make a lot of money, they're going to scam you. It's a different story if you're requesting like a $200 payout or a $400 payout. So it's okay if you're starting and you want to buy a cheap account for $50. But when you're requesting 10,000, 20,000, $40,000 payouts, they're going to find ways to deny you. That happened to me. And yeah, so I will never trade prop again, at least that version of prop. Yeah.
Oh.
And yeah, that was tough. Start to the year. That started this year.
Hmm. Yeah, I heard you say something like, I knew prop was too good to be true, and it is in one of your videos. And I felt that exact same thing. Although I'd never got to the stage where I was requesting large payouts, you do feel like it's too good to be true. And then obviously you see people start to go down and not paying people out and things, and you start to
Right.
realize maybe it's not the best way to approach this.
Right. Yeah. I knew from the beginning the incentive was there, but I thought, well, I'm getting the payouts. And maybe I got unlucky on the timing, but it is what it is. I mean, I got lucky in dodging FTX. I mentioned the Celsius loans. I was with BlockFi too. I guess they're reimbursing people, but I had large sums of money and pulled them out right before they went bankrupt. So also that I thought like, oh, I can just time the scams, like I'm just gonna get out before they collapse. And yeah, finally they got me.
Very good. And was it, and you mentioned all the different systems you were trying over that period.
Right.
Was there any systems in particular you stuck to for those prop firms, or were you constantly switching? And when you were, I guess, when you were specifically trading prop, were you doing a consistent system, or were you starting to trade different
Right.
types of ways?
The first one was more of a day trading system based around trading perpetual futures data on Bitcoin and ETH. If there's a major liquidation, you go the other way, that sort of a thing. And that still
Okay.
works great today, I think, during consolidation periods. And then the second time around, when I got funded for 7 figures before I lost it, I had switched to a short-term trend following system, which was like trading the daily chart. And yeah, I mean, I remember one of my big trades was like a big pyramid on the Nikkei 225, making new all-time highs for the first time in 34 years. So constantly sampling. And then after prop, I had another spiraling losing period. And then I was like, all right, let's give this algo thing a try, which I had been trying to do, but I got connected with the right person this time. And he sent me, I've been watching what he was doing. He's a really smart kid, I could tell. So he's got like a bunch of different bots. We've got a portfolio of bots. Okay, he's got like 200 some bots, and taking the best, 20 of like uncorrelated ones to create an equity return. It's trading forex. So at this point, I've traded everything. I've had a period trading stocks. The only thing I haven't traded is options. For the most part, I've traded futures, right? So I'm like, yeah, I need a break, and I like what you see, what I'm seeing. And he's like, just dropped out of college. He's doing Uber. He has no money, so I'm like, let me fund you, and we'll do it. So one of the things about trading based on a system is you have a historical data set, and that historical data set has a largest drawdown, right? So in your forward testing, you can that largest drawdown is very important, right? Especially if you don't understand a system. So the plan is, if we ever make a larger drawdown, we're going to shut the system off, right? If for a basic computer system, that's something important. That's something that I learned from Market Wizards. Like, a new historical drawdown, shut it off. There's something wrong, or we got to look at why it's not working, right? You also choose what that is. Like the past historical drawdown was X%. What do we want that to be? We could say 25%, 50%, 75%, depending on your risk tolerance. It's your choice, right? You could put it 99 if you really want to risk it, right? But there's a max historical drawdown from that happened once in 10 years. So he has 10 years of data. So I'm like, all right, bet we'll set a reasonable risk percentage. We can trade it aggressive. And in my mind, I'm like, we're gonna hit a drawdown of this magnitude maybe in a couple of years if we're unlucky, and I can just have this thing running. So those 2 months, break from trading was awesome. I started a adventure tourism business. I'm like doing so much. You know what's crazy though is 2 months. The first trade was a loss. Never went positive and went straight to max historical drawdown in 2 months. Lost me like 15, 20
No
grand.
way.
And I'm like, okay,
Oh, wow.
that has to be incredibly unlikely. How's this possible? This is the biggest drawdown in 10 years, happens within the first 2 months, and it's never in profit. Like, what the hell? And we have to shut it off now too, right? So what I learned from that said, it's all tuition in the market. It's going to come back, because what I learned about that is fragility and robustness in a trading system. It was super unlucky, but it was going to be revealed eventually that this is a fragile system. In the meantime, with another guy, I'm developing the main system that I like. Me and him are not technical at all. He's hired a dev. I'm giving him my ideas. He's giving the orders to the dev, and we're developing a system on PineScript through TradingView backtester. And I'm learning this concept of robustness, right? So a robust trading system is you can change any particular asset. Like, it trades the same on gold as Bitcoin, or it trades the same on, or at least it's profitable. It's profitable if you change the time frame to weekly or daily. It's profitable if you change the stop loss from 1 ATR to 3 ATR. It's profitable if you change the ATR period from 10 to 100. It's profitable if you have a 2R take profit. It's profitable if you have no take profit and just trail your stop, right? A robust system, you can change anything and it doesn't break the system. So what we found out, I went back to the quant and it's like, all right, I think I know what the problem is. Maybe it's fragile. Take your bots, see if we can break them. Just take your Euro USD bot, see if it's profitable on JP USD. Take your GBP bot, see if it's profitable on the Swiss franc, and they weren't. So it was like, all right, what's the sample size? 100 trades. This one 160 trades, lost 40 trades at a 1R. It's just noise, right? You can chart Nicolas Cage movies to pool drownings, right? You need like you can computer backtest can be highly flawed, right? This is what I learned. So nothing against this kid. I still think he's a genius, and it's just a learning curve for both of us. And I'm still going to have him manage money with me, hopefully soon, because we cooked up a perpetual future strategy that's automated and is now running. But what I realized, another is also your computer system needs to have a fundamental idea. Because from the beginning, it was like, bro, why does this work? And he's like, I have no idea, but it does. I'm just taking I'm just data mining. I'm like taking different stuff and plugging it together, and it works. And I'm like, I'd feel a lot better if I knew why it worked, right? So the system that we developed is based on, okay, fiat currency devalues. Gold is harder than the dollar. Bitcoin is harder than the dollar. And stock market indices are harder than the dollar. So we should be long only, right? And we should hold for a long term and not be stopped out. But a lot of what we found was through a form of data mining, which is surprising because my business partner, and it was really smart for doing this. Anytime I told him, let's throw this in the indicator and the strategy tester, he didn't just have one setting. He put on a switch. So like yes, no, right? Like turn trailing stop on, turn trailing stop off, or like changing parameter. So like for the stop loss, you can change it to 1, 2, 3, 4, 5, 6, 7, whatever. You can change anything. So it's like this whole he built this whole customizable backtesting thing. So I learned a lot of things from there. Like a wider stop works way better for trend following. Like 3.4 ATR off of a 10-day period, which for Bitcoin right now is like a 25% stop loss is like historically optimal. It's not what you think as a day trader. And it's like, okay, it's robust. So we could tweak it so it looks insane for Bitcoin. The back test is like 25% drawdown, turns $10,000 into $10 billion, right? But what I learned from the losing with the fragile systems is, we need to make it generalized so it works on gold, Bitcoin, and all the stock market indices, and silver, and oil, and anything random. It should just be generalized, and it works, and it does. So I've been able to build that. That was in like June, July of this year. The problem is I didn't trade it. I tried to trade it, and I came in. I didn't have a proper schedule, which is the next thing I'll get to. But I came in right before the Japan crash in July. Was that July or August? When there was like chaos because Japan hiked their rates.
I think it was mid-year when the Bank of Japan intervened. Is that what you mean?
Yeah. So I had just started this trend following system, and then just got wiped out on this sharp dump. And then I was like, I don't want to do this. Yeah. But if I had just continued to trade the system, it would have bought the day of the bottom on every asset and just like pyramided, added on, right? So instead, I went into like trading perpetual future data, discretionary, which has worked okay. Hasn't been that bad, but significantly underperformed. And I was spending up to an hour a day doing it. So at this point, I'm like, I haven't I put on some trades in the system the other day, but I've looked at the chart once in the past 3 weeks. I'm over it. It's just too much time. It prevents me from living my life and doing other things, and it's not making me money. And the system that I
Mhm.
have trades on average, it's closer to investing, one entry a month per asset. So if I want to trade one asset, one day setting up alerts, and then one trading day a month on average, two trading days a month. I'm going to trade gold, Bitcoin, or ETH, and one of the stock market indices. So like 4 trading days a month on average. Go live my life. Try to get that automated too. But people will say like, oh, you need to put in more time if you want to be. That's one of the big problems that hurt me and hurts a lot of people. Is like, even an hour a day is not enough. Well, there's studies that show inverse correlation between how often you check your portfolio and how much money you make. Specifically, the worst results are checking your portfolio every day. People tend to underperform the market. And the best results are checking
Mhm.
your portfolio weekly or less. Those people make the most money.
Yeah.
So almost everything you're
Yeah.
seeing, day traders, those guys are almost all losing money, presenting like they're making
Mm.
money, or they're making money off their course. I've been there as well, where it's like I'm selling an awesome system. I'm not even trading it, and I'm losing money day trading. And I'll
Mm.
admit that. That's why people like me. Is I'm not here to hide it or fake anything, right?
Yeah. Yeah, that's funny because I also heard you talk about trying to take the other side of your system or trade against your system. What can you expand a little bit about what you were doing discretionary trading when you were trading against your
Right.
your
I
system?
think this is just a psychological fallacy that's caused by euphoria or fear. But for instance, so
Mm.
part of this computer system, there's uh, it 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 cuts off longs when price falls under the 200 moving average. This is a way to avoid bear markets that could happen. Like the Japanese stock market went down for
Yeah.
34 years before a new all-time high. We don't know what could happen to an asset. And
Mhm.
we have a really good short strategy that shorts altcoins. And this is what I was doing this summer and making good money doing it. But like the long strategies, it has to shut off when price moves over the 200 moving average, because otherwise you're just shorting a
Mm.
bull market. So
Yeah.
I don't know what it was. Like it had been working. Part of it's habitual. Like I was in the habit of trading in this way, and I was stubborn to change, even though I knew, okay, we're reclaiming the 200 moving averages. I'm supposed to shut off the short system, but it's working so well for me, and it trades every day, and it's so many
Mm.
trades, and the longs are just not very many trades. So I just traded it one extra round than I shouldn't have and took a loss. And then with the long, I don't know, I was just itchy. I don't know. See, this is why it's like I need a change. I mean, I was at a social event the day after the election when Bitcoin made its first new all time high, and all the stock markets closed at an all time high. And a friend comes up and asks, like, she trades a little bit, what do you think about the markets? And I'm like, everything closed at an all time high today. Historically, that's the best possible time to buy. I closed my long actually though, and I'm short. It's like what?
Yeah.
Like what's wrong with me? Yeah, I don't know. I tried to be long.
Yeah.
I set limit. I kept
Mm.
setting limits just a little bit under price action, and from all the way 58 to 99, like it just barely caught a piece of it.
Yeah.
I had like a limit at
Mm.
58. It was like $70 under price, and it just never filled. But yeah, it's like, well, I could say it's unlucky, but I feel like everything is like a slap in the face and a wake up of like, just buy and hold. And you could just buy and hold, or
Mhm.
you could do it. I like the way that I have it set up where it's leverage protects, leverage amplifies gains, stop loss and 200 moving average, protect losses, and market timing enhances gains too. But I'm
Mm.
trading a version of buy and hold now. The average hold time is like 60 to 90 days per asset. And there's quick losses too. So the
Yeah.
winning holds are much longer, maybe. 180 days to a year, possibly sometimes.
Hmm. I really like that though. I think it's kind of like that maturing view. I see quite a few traders kind of grow into the idea that equities drift higher. Assets like Bitcoin go up, gold goes up. Like I spoke to Jason Shapiro, and I asked him, I was like, if I gave you $1 billion, and I think he currently manages 200 million, I said, don't worry about your risk target and your current investors. There's no risk target. You can pick your risk target and you can do whatever you want. And what strategies would you allocate to, and why? And then he said, trend following, his own strategy, and then 33% just buy and hold dollar cost averaging
Yeah,
equity indices. So for me, it's like when you hear someone like the highest level of fund managing saying, just do this dollar cost averaging. It's so simple, but I think everyone just runs towards the complexity, and then eventually people, I think, and you and maybe I'm coming towards it too, that this should be just the overarching structure, that these indices or assets go up.
yeah,
Long only is a good approach.
right. I like having
Yeah,
the 200 moving
and
average filter though, because it might not go
yeah,
forever. So like a way to get out is good, right? But yeah, for the most part, and as
yeah,
far
sure,
as my system, like the inspiration from it is trend following systems. I'm a heavy reader. I've read widely in this space. Richard Dennis and the Turtle Traders. I know a lot of people are familiar with this, but Richard Dennis turned $400 into $200 million. I believe that's the greatest single monetary return of any trader. It's ridiculous. And he went and he
yeah,
taught a group of inexperienced new traders. The training period was only 2 weeks, and he taught them a very simple trend following system. And the whole group averaged 100% annualized for 5 straight years. Crazy, right? So it's like,
mm,
what are they doing?
yeah,
Well, they're just buying breakouts and holding them and pyramiding. And they're not consistently
mm,
profitable also. Richard Dennis was only profitable 55% of months. These guys are profitable, yeah, a little more than half the months. And they had crazy drawdowns too, 50% drawdowns. But
yeah,
always at the end of the year, they had fat gains. So yeah, the system, and I'm still getting used to it again. And it's like, I need to protect myself. There may be periods where I relapse into day trading. I hope not. I think it's done, but
mm,
it's hard even when I put on a trade to not stare at it. But yeah, just get super busy and
yeah.
log off, and yeah, set the position with a wide stop and let it run.
Mm. So I heard you talk a little bit about pyramiding, using ATR to set your
Right.
stop losses, and I think overall just trying to kind of I guess your strategy is a trend following strategy with a number of things that you kind of scale into
Yes.
during a trade, right? If it's over longer periods. So can you talk a little bit about how you take that kind of a basic, or I guess how you set up a system or enhance a buy and hold type system?
Okay. Well, let me talk about the system, and some of this came from fundamental ideas. Some of this came from playing with the numbers and seeing what worked. But
Yeah.
um, okay, like we talked about, one way to enhance over buy and hold is to have a filter where you don't take entries under the 200 moving average and you have a stop loss, because
Mm,
that prevents you from taking huge losses in the event of a massive decline. Another way to enhance over buy and hold is to buy at the best possible times, which historically are breakouts and new all time highs where things move fast. And another one that this one the trend followers don't have, but if you buy a dip, I'm the trend followers typically we're looking at 30 or to 60-day highs. I'm looking at calendar highs and calendar lows. So if price takes a calendar low on the monthly, like an old monthly low, and closes above it on the daily, that triggers a dip buy so long as price is over the 200 moving average. And that is like the best
mm,
entry. most of these dip buys happen under the 200 moving average, so you can't do it, right? But if there's like a sharp pullback of the 200 moving average and it closes, um, so and then the pyramiding. So what I found
Yeah.
is no TP works, one entry, one exit. That's what the trend followers do. That's given the best results. And I don't have a traditional trailing stop. It's only you advance when there's a new entry. So you might not advance your stop for months. And it might all come back. It usually
Right.
doesn't. But yeah, so I mean, for instance, the way it would have traded, say like the NASDAQ is, it would have bought, I don't know if it was under the 200. Yeah, but it just like, I think it would have like 6 positions running now, all of them in profit with the stop in profit. Like bought the July bottom. I actually don't know if that was under the 200. I would have to look back. But then it like bought a breakout in September and then in October and then November. And it's just, at all time highs. And if everything comes back down, it's going to get stopped out for a win. And if it keeps going, it's just a ridiculous. So leverage, larger position sizing, right? You can beat buy and hold by allocating. It's refreshing. Oh yeah. Okay. You can beat buy and hold by being 500% long when it's going up, right? So I mean, leverage is powerful, but you have to have all sorts of protections around it.
Yeah. You said something. You said a lot of interesting things there. One was, I think you said, trend followers found the best entry and exit is one entry, one exit. Is it? Is that what you said? So is it like you don't have a take profit target? You just continuously scale into the trade and then trail your stop. Is that right?
Correct. No TP. Yeah. So Richard Dennison, the turtle, said one entry, one exit, and then the computer back testing I've done, at least for this sort of trading, has confirmed it. Like any kind of TP drastically reduces the profitability over the long run, which is really hard to trade because you're
Right.
tempted to, I just want to bag that. I just want to bag that profit. But
Mm.
yeah, you got to let it run. The way the turtles did it is they started with a tighter stop and advanced it quickly and then gave it wider berth. And the way that we do it is just start with a super wide stop and advance it very rarely as you get new signals. I've
Mm.
found a normal
Yeah.
trailing stop doesn't work very well or reduces. It doesn't work as well as like picking the right moment to advance it.
Yeah, that's. I think maybe I just need to brush up on my trend following reading, but I think that's a really powerful idea. And I say that just as I've been short the 10-year yield midway through last week, right before Scott, basically before the 10-year yield fucking fell off a cliff, which is great. But at the same time, I took profit before coming into Thanksgiving, as in the Wednesday evening at whatever 2.5 or. And I constantly find myself
Uh,
taking profit at target and then it running on. It's like it's plus 3 or now at this point. And instead, the first run back towards me, and this is partially my
uh,
fault for not having a plan for a first bounce. I sold a contract into a first bounce at like 1 hour, because I was like, oh fuck, it's coming back or whatever, and it's like I committed a cardinal sin or something, and then obviously and then it ran on to 2 or to 3 or, and then I was out at 2.5 or, and now I'm just kind of like,
right,
I feel like I'm not doing this the way I should be doing it. You know what I
right,
mean?
right.
Although I've made money, as you said, maybe I'm inhibiting performance. If I wasn't doing that or had a better methodology for taking profit or
Yeah,
not taking profit at all and just yeah, scaling in, I guess.
right. Yeah, I mean, I think back to my 50 Bitcoin long. I think my risk on it was like $5,000. So what is that? Was my stop $100? Right. So how many R has it round from there? Like 1,000 R, thousands of R, right? Trades can run thousands of R.
Yeah.
They can run hundreds of R. You don't know. So yeah, I recommend
Mm.
for you and anyone, Check out the book is The Complete Turtle Traders, because that actually shares the exact strategy that the turtles used. And it's so simple. It's really simple. They didn't spend much time trading. A lot of them never came into the office. There was nothing to do. And they did 100% a year every year. From their
Yeah.
first year, and never have a losing year. Every year, 100%, right? Trading a really simple system with 2 weeks of training. I think it's possible.
Mm.
Yeah, it's possible. It's still possible today.
Yeah. Yeah. I do. I think one thing that put me off trend following initially, I think I was just, first of all, I found it hard to do naturally,
Right,
but I also thought that maybe, a lot, the edge had kind of eroded in it, but the more I learn, the more I know that's not true.
right,
I think it's still, I mean, I know this guy on LinkedIn. I kind of see him as kind of like a little bit of a LinkedIn troll, but
right.
he's always commenting about results that say Richard Dennis got versus Warren Buffett on an annualized basis, and like they're just, again, you're talking like you said, plus 100% returns versus someone that makes 30%, but 30% is amazing, but when a trend follower walks in and it's plus 100, and you're like, this is yes, it's like chalk and cheese,
He averaged 100% a year for 19 or 20 straight years.
that's
Yeah,
crazy.
it is
Yeah.
crazy. He had many 50% drawdowns, though. His risk was out of control, even at huge numbers. But yeah, I think
Oh, really?
trend following is a robust system. So their exact system has probably lost edge. So, for instance, I'm looking at calendar highs instead of 30-day highs. I'm using a wider stop than they used to use. I think certain things maybe need to be updated, but I mean, the market's moving trends. That's how it is, and probably how it will ever be, always be. So I think it's like a robust strategy, and you can update it for the times a little bit. But
Yeah.
yeah,
Yeah. Yeah, but I mean, you have a fully kind of back tested strategy, which kind of brings me on to our last kind of topic, which is on trading psychology, right?
right,
So even with a fully tested
yeah,
strategy, you're really open about the challenges of still trading with that system, even knowing it, right? Which I think is really powerful because you can give a lot of people a system, or I think it was in the Turtle Traders or someone speaking about trend following told me, it's the reason psychology is the reason that you can give the exact same system to two people and they'll get
right.
different results, right? So in terms of managing or implementing a strategy, have you got any kind of, I guess, awareness you can bring to people or ideas in terms of how they can have a decent trading psychology and
Right.
implement a strategy?
Okay, so here's the main thing. Like, you need to pay more attention to scheduling and life quality. And people confuse addiction and compulsion to trading with loving to do it. And I did this. I like, oh, I love doing this. No, I'm addicted to it. It's not healthy, right? So I've got a background in addiction. And by the way, we can go another 15 minutes. It's all right. Um, I've
Okay.
got a
Yeah, cool.
background in, my dad was an alcoholic. We went to 12-step meetings as a family when I was like 12, 13. Um,
Oh,
I was a stoner and I had quit. So like I understand addiction and you think you love the thing, but it's just addiction. So
mm,
one of the main ways to beat addiction, it's not like having rules and you follow those rules. You just give yourself better alternatives. So, for me, the worst thing I could have done is, which I did, is like I quit my job and just focused on the computer. Now my life is super boring, but I'm getting a lot of excitement out of trading. In order to trade a
mm,
boring system, you have to make your life super exciting, right? So in this past year, I'm like, this is why I moved into adventure tourism. My job today, I'm going to go work on a marine wildlife safari vessel. I'm a tour guide. I'm diving with dolphins and sharks. I've got a Sunday. I'm taking a group of people up a borderline illegal hike. That's like a 12-kilometer hike. Getting paid for that. Like, this is my life now. I don't want to log into the
mm.
charts. It makes my life worse, but I'll do it if I have to, right? And people will say, Oh, well, that's not like the mindset of a profitable trader. But again, I think arming yourself with the statistical knowledge of checking less yields better results. I didn't really know that when I started. I was just, it wasn't even until recently that I was exposed to that data. And I'm like, man, I wish I knew that. Or maybe I saw it and I just wasn't looking for it, or I didn't. So the best advice I can give to people is to make your life super interesting as you can. People come to me and they say, I don't like my life. This is why I want to trade, or I hate my job. And I'm like, see if you can find a better job. Same industry, better group
Mm.
of people, maybe, or maybe a
Yeah.
different industry. Can you go sideways? You can't do it today, but can you work to it? Look in your environment. Like, what's a more fun job you can do, right? Or also, like hobbies, how can you
Mm.
fill your time more so that your only source of excitement and dopamine isn't trading?
Yeah. Yeah, it should be. I think I'm going to clip that and just put it on a siren in my car or something, because I
Yeah,
think people come and they just don't see that part of it, right? It's like that this not only can it damage your mental health, but it can burn your capital, as much capital as you give it, if you don't get it right and you don't get over your own challenges. But it's so interesting to see you go from, I guess, from someone at the start of this conversation, we were talking about checking a chart 60 times a day, to kind of at the end of the conversation, we talk about maybe I want to check this 1 hour a week or a month.
right. A lot of it's accumulated
Yeah.
trauma. So I don't, not on Twitter. No traders have my phone number. I have a Discord for my own private Discord. I check it rarely. I don't talk to anyone. If anyone in person talks about the markets, I tell them not to. I walk away. If something pops up in my feed that shows a price chart, like on Facebook or Instagram, I unfollow or hide them. Like, I don't
Okay.
need any of these social contagion triggers that would cause me to like spiral into it. Yeah, I just want to follow my. If I get when I get an alert, I will go and I'll place a trade and then try my best to extricate myself and lock up my computer and put it in the shed until the next time, and hopefully potentially get it automated again too, because it's not hard to automate this thing.
Hmm. Yeah, it's because it sounds like you have. I mean, yes, obviously, I think the crypto market is just seem the people that come through the crypto market just have a lot of trauma, and it's funny the guy that actually sent me a link to one of your videos on risk management about 2 years ago. Tom was his name. He was a crypto trader and he lost about, I think, 60, 70,000 euro when China announced the ban on crypto mining. And I was kind of getting into trading more on the time, not crypto, but um, and when he was telling me that story, of that crypto being on cold storage, and he was on a Teams call, and then he saw the news, saw the price, and knew he had lost like that much money. At that time we were also about 22, right? That's like a life changing amount
Right,
of money for a 22-year-old. It's like a deposit for a house, right?
right,
In
right.
in Ireland, and Ireland has a housing crisis, right?
Yeah,
So yeah, it's I mean, I couldn't even kind of process how difficult it was to get through that at the time. I just kind of blanked it,
yeah,
because for me it was like, okay, I lost £400 trading options.
yeah.
I'll get over it. You know what I mean? But that, I just think, is just a different level of challenge you're probably faced with.
Well, I guess the last major point I'll share here is, and I don't know if this is just my experience, but in 2019, my net worth was like January 2019, like $4,000. And when it was like 100 times higher a couple years later, it didn't make me happier. I experienced more euphoria, but it made my life worse because I had it totally destroyed my concept of money and working. I had loved my job. There was problems with it and it was stressful, but I went from like being around people all day to like on a computer, and I just didn't manage the money well. I mean, in retrospect, buying a house wouldn't have made me happier either. I didn't see that as really an option. It wasn't quite enough in Hawaii. But I would have gotten like, I don't know, like a scuba diving certification or like helicopter license or a captain license or yoga teacher training or massage. That's what I would go back and do, I think, if I instead of
Mm,
going into trading. But yeah, you think people always say one of my more popular videos recently, there's a guy he said I made $2 million this year. I wouldn't go back and do it again. I'm mentally ill. I'm alone. This is terrible. Don't go down this path. Trust me, I made $2 million this year. And people are like, well,
mm,
why doesn't he just take his money and run? Like he can live off annuity or whatever for the rest of his life. And you don't understand when you come up on a lot of money quickly, you focus on the money more, not less, because this is the thing that's working and you need to protect it. So he's like, he didn't say this. I know. He's like, I need to protect this 2 million. I need to watch it closely. I need to manage it closely. That's what happens. So, I mean, careful what you wish for. Um,
mm.
Again, like I'm way happier working normal jobs with people I like outside. And then trading on the side is helpful. Like you don't want to be broke. You don't want to have no money. You don't want to have no money. But yeah, trading's
Mm.
not a get rich quick scheme. It's not a source to consistent income. It's a way to build extra money into wealth on the side, which hopefully you have a plan. But if you don't have a good plan for it, it can destroy your life. I mean, how many lottery winners people win the lottery, it destroys their life. It just screws their brain up. So
Mm.
that's kind of what I experienced. So the point is like grass just isn't greener on the other side of trading. Most people are losing money, and a lot of people who are winning the money are makes their life worse in some way. So yeah, trade at your own risk.
Yeah, yeah, I was going to say at the end of a trading podcast, that's a good note to to finish on. But I want to just say that can you let people know where they can find you online for people that are listening?
Right. The main place is Travis Wu Trades on YouTube. I'm also on Instagram, but I rarely post. I'm also on Twitter, but I very, very rarely log in. So YouTube's the main way.
Hmm. Super. I'll link your YouTube channels, both of them in the description. And I also just want to say thank you so much for your time. I think the amount of the stories and the swings of your journey, I think, are probably there's few and far between people that can speak about them. So I really appreciate that.
Yeah, thanks for inviting me on so I could ramble ramble about myself.
Absolutely, no, I enjoyed it. Cool. Thank you,
Yeah.
Travis.
All right. Appreciate you, brother.